Dirty dealings, corporate battles, consumer woes. This is Evening 5. The High Court here has allowed an ad interim stay on a 415.5 million fine imposed by the Malaysian Competition Commission on 5 feedmillers pending filing of affidavits and submissions in relation to its judicial review against the fine. Judge Dato' Amarjit Singh Surjit Singh gave the ad interim stay as Jason Teo, the lawyer for MyCC, had said that they would submit an affidavit to show that the fine the 5 feedmillers are required to pay will not affect the poultry industry as they claim. Justice Amarjit has set the affidavits to be filed by January 31st, submissions to be had on March 21st, and hearing to be on April 8th. Amarjit also granted leave for the feedmillers' judicial review application. This means that the court will hear the merits for and against a judicial review and will determine whether there are merits for a judicial review proper. The fine was imposed on the 5 feedmillers, of which 3 are public listed companies, in December last year for colluding in a chicken feed cartel to fix poultry feed prices. This is the largest fine that the quasi-judicial body, the Competition Appeal Tribunal, has imposed in its 12-year history. The listed companies are Leong Hub International, Malayan Flour Mills and PPB Group. The other 2 feed millers are GoCoin Feed Millers M under GoCoin Group and PK Agro Industrial Products Malaysia under RM415.5 Holdings Malaysia, which in turn is a subsidiary of Thai conglomerate RM415.5 Group Co. The Malaysian ringgit will strengthen further this year, supported by moderate global growth, stable oil prices and strong export demand, according to KSI Strategic Institute for Asia Pacific. The ringgit is likely to trade 4 to 4.20 against the US dollar this year under the base case scenario, the independent think tank said. KSI's forecasts point to a much more optimistic outlook for the ringgit than the median 4.49 predicted in a Bloomberg poll of currency strategists. KSI said the ringgit could potentially head towards 3.90 to 4 against the greenback if global oil prices remain high and Malaysia benefits from increased foreign investment and robust trade demand. The ringgit was Asia's best performing currency in 2024 after rising over 6% to close at 4.47 against the US dollar, thanks partly to stronger than expected economic growth. Further, coordinated efforts to encourage inflows have also aided. KSI flagged geopolitical tensions, higher US interest rates and domestic inflation could lead to volatility in 2025 for the ringgit. This year, Malaysia's economic growth could moderate to 4.9%, while inflation will likely pick up to average around 2.7 to 3%, according to KSI's forecast, amid reaction from ongoing domestic policies and the heightened external challenge from the incoming Trump administration. Further, global financial stress, capital outflows or rising global interest rates could weaken the ringgit and pose downside risk towards 4.30 or above the US dollar, the think tank added. Investors are expected to take a more cautious approach in the local stock market, focusing on earnings and clear outlooks amidst anticipated market volatility in 2025. Analysts are, however, optimistic that the Malaysian stock market is in a stronger position, supported by solid fundamentals and a strong performance in 2024, which saw the benchmark index FBM KLCI rise to a high of 1,678 points before settling around the 1,600 range. Investment Bank, in a strategy note, highlighted that local market liquidity is expected to remain healthy, driven by privatization activities and increasing cash levels. In the medium term, the mandatory EPF contribution for non-citizen employees and the Prime Minister's call for government-linked investment companies to focus on domestic investments may further boost liquidity. The research house favours underperforming sectors such as technology and plantations, driven by supply chain shifts and stronger crude palm oil prices, while expecting ongoing interest in data centres to support the positive outlook for construction and property. Invest top picks include CIMB Group Holdings, Gamuda, Kuala Lumpur Kepong, Samdabi Property and Vitrox Corp. In a separate note, Kenganga Research said investors could adopt a wait-and-see approach in the first quarter with focus on earnings visibility and outlooks. It expects the consumer sector to benefit from the minimum wage hike to 1,700 ringgit effective next month and tourism growth. Meanwhile, AI and data centres should see increasing increased demand from global big tech investments. The research house also placed emphasis on stocks with good dividend yields at reasonable valuations, particularly in the banking sector. It added Mr. DIY Group and Petronas Chemicals Group to its top picks. Maybank IB, which has set a 2024 KLCI target of 1,740, sees the banking sector acting as a key driver with a positive outlook for the consumer and healthcare sectors. Awan Biru Technologies secured at least a one-year extension to its Cloud Framework Agreement, or CFA 1.0, with the government, under which it manages and delivers Google Cloud services to the government. Awantec said in a BOS filing on Thursday that the extension will be effective from Jan 1st until December 31st, or until the launch of CFA 2.0, whichever comes earlier. The value of the extension was not detailed. The cloud-based service provider initially entered into the agreement with the Malaysian Administrative Modernisation and Management Planning Unit, or MAMPU, and Google Cloud Malaysia in March 2022 to provide the specified service for up to 35 months until December 31st, 2024. MAMPU is a government agency responsible for modernising and reforming the public sector. The contract value was not disclosed when it first announced the agreement. It only said the agreement was to establish the scope and basic terms for the government's purchase of Google's cloud services. Awantec said the extension underscores the continued and strengthened collaboration between all parties involved to support the Government of Malaysia's cloud initiatives, ensuring continued progress and innovation in cloud infrastructure and solutions. The Transport Ministry will collaborate with the Malaysian Anti-Corruption Commission to investigate vehicles that fail to meet the standards set by the Computerised Vehicle Inspection Centre, or Puspakom. Bernama quoted Transport Minister Anthony Loxiufuk as saying that the probe would address both integrity issues and the possible existence of syndicates offering unauthorised services, such as approving vehicles that do not comply with Road Transport Department standards. Lok added that 3 Puspakom staff have been questioned so far, and he did not rule out the possibility of summoning others for questioning if necessary. Meanwhile, MACC Chief Commissioner Tan Sri Azam Baki said the RTD is expected to submit a technical report on its probe within 2 weeks. Meanwhile, Lok said the ministry will soon reveal the companies or entities granted licenses to conduct periodic motor vehicle inspections. He said over 10 companies had applied for licenses after the government decided not to extend Puspakom's concession as the sole provider of nationwide periodic motor vehicle inspection services. The minister added that the government's concession agreement with Puspakom ended on August 31st, but the company can still operate as it now holds an operator's license.